Stock market today analysis for Tuesday, January 31st, 2023. There is a link in the description below this video. You can download some stuff. You can check out the mission of I Have Success. And also in that description, there is 3 different playlists. One of the playlists is trading options for beginners, with beginners in all caps. With that playlist of 5 videos and these 2 downloads, you should be in a position to start paper trading. Paper trade, selling cash secured put options on stocks that you would feel comfortable owning. And I'm going to link to a video right here at the 1 minute mark. Get ready, it's coming. You don't have to watch it right now. You can remember. It's really easy to remember. 1 minute. In fact, 1 minute is almost here, and boom, there it is. Now this video is going to give you reasons why you should be selling cash secured put options. I've found that when I know the reason why, the how-to becomes a lot easier. So check out all that stuff. Let's take a look at what happened for the last day of January. We're looking at the futures markets, and they are still trading. VIX is dropped down on yesterday's candle. This new candle, we see it's forming in the bottom 10% of the previous candle. A lot of volume on the VIX coming down. S&P 500 futures basically negated this down candle right here with today's bull candle. But you know, basically these last 3 candles have just kind of gone sideways. Closed here, and then I know it closed down here, but from here to back here. Is this a bullish sign? I don't know. It's bullish that we're over the 200-day moving average. I would suppose. We got low, higher low, maybe a higher low. But is it really that? How bullish is it? It can be bullish, but how bullish? And we see that candle is opening. Today, the new candle here is in the top 10% of that candle. Same thing with the Dow Jones futures. The sell-off right here was reversed with today's candle, and we got the newest candle forming in the top 10%. But with this, we got a high and a lower high. Well, we do have a low and a slightly higher low, but that difference of the it's more significant. And keep in mind, this is looking at a quick snapshot. This is 1 month of information, with each candle being a day. It's probably not the best way to try to figure out what a long-term trend is when you're not looking at a long-term chart, but it gives me a good idea of what's going on in the overall markets. NASDAQ futures, not as powerful of a move to the upside as the S&P 500 and the whatever those guys, Dow Jones. It seems that the tech stocks, tech sector, that type of thing, still lagging behind a bit. And the Russell 2000, boom, that was probably the strongest bull candle out of all of them. Again, just totally engulfed this previous candle. Engulfed it. See, opened here, closed all the way up here. You could easily fit that in there. So that's a pretty good sign. But out of these 4 are basically showing you the futures of the whole stock market futures. And it's a very volatile market. And I would imagine that if we looked at a little longer time frame, we'd see some kind of sideways action going on, but we're up in some sort of range. 10-year yield has kind of started moving a little bit sideways, kind of running out of some steam here. Had a strong candle up here, not so much showing, not a lot of strength there, showing not a lot of strength there, but it's moving up, selling off a little bit, kind of going sideways. Seems to be kind of running out of some steam right in that resistance area. Crude oil coming down like not going all the way down to 70, going down to whatever this number was, 70. I'm not sure. Whatever that low is right there on that candle, and then coming back. So sold off a little bit, really just in this range, and selling off a little bit. Maybe it's going to come up and test. Let's see if when I wake up tomorrow what this candle is going to look like. Natural gas, how low can it go? Well, I mean, I guess it could go, technically, possibly it could go below zero. Crude oil did not too long ago, but it seems like zero is the lowest it could go, and theoretically, it doesn't seem like it should go that fundamentally, I guess, versus theoretically. But we see these candles getting, just not moving as much, but they, right in here, I thought they weren't moving as much, and it dropped off quite a bit. So how low could it go? I could at least drop, pardon me, another $1 pretty easily, right? I don't know if that would be easy. We see gold has started moving sideways, right under this about the 1950 area. Just kind of moving sideways lately, but still up considerably from where it was a month ago. And silver just moving sideways. Keep in mind these, when I say silver, I specifically, and when I say gold, I specifically mean the silver and gold futures contracts. This is not what you'd buy an ounce of this metal at. Try to buy an ounce of the metal and then see what price you can actually purchase it for, and then look at this price, and then you'll get an idea of what I mean. Bitcoin seems to be moving sideways, and got up to this 24,000 right in here, but kind of sold off. So let's see how long it takes to float back up to this 24. Let's see how long it stays above this 22. If it keeps staying above the 22, then that doesn't mean it's going to the moon, but if it stays above 22, that would mean that it's not going to 16. Yes, it wouldn't be going to 18 either, right? So trade accordingly. Do you, and if you live in a state that grants you enough freedom to partake in the cryptocurrency, then send me a message of which state you live in, and I'm going to consider moving to your state. Look at the general markets here. We looked at these three already: Bitcoin futures, crude oil, and gold futures. The dollar kind of continues to move sideways after it was through like November, December, kind of really dropped down, and then January it's kind of been moving more sideways. TLT overall, I mean, it was a big update today, down day yesterday, but it's kind of in the sideways range right through here. And the VIX sold off, continuing to stay basically below 20, kind of gets up close to that 20 and pulls off. But the VIX is I've heard it described as a fear meter. So right now the fear basically seems to be pretty low in the market for whatever reason. However, I don't know how to explain this, all the details, but there could be something happening with 0 days to expiration options that either directly or indirectly causes the VIX to go lower, where it potentially could be maybe a falsified low, that it's being pushed a little lower due to maybe a lot of buying calls on 0 days to expiration. Now, I'm not number one, I can't simply explain it, so which would mean that I don't fully understand it. And also, because I don't fully understand it, I'm not saying that it is. I'm just saying this is an idea that I've been hearing lately that I'm learning more about. We see we have a strong candle to the upside over here on the SPX, and no wick to the top, right? Prices started here, pushed all the way up to the top. No selling off lower, just all the way up to the top. Over here, we got a little bit of we got a tad bit of wick to the top. Definitely got some to the bottom. And on the Dow Jones, And then on this NASDAQ, doesn't look like anything to the bottom, but I can see there's just a tad, just a tad bit, come on, tad bit to the top. When I highlight it, it's so minuscule that when I highlight it, it covers it up. But I can see it just peeking up there a little bit. And Russell 2000, boom, hit a look at this. Isn't that interesting? This candle all the way on the side has the low. This candle all the way on the side has the high. Tomorrow this candle will be off the screen and a new candle will be presenting itself. It's basically going to show like 30 days or 20 days of 20 candles, 30 candles, something like that. I never counted them, but we're showing 1 month time frame. Let's take a look at all the these different sectors, main sectors, small sectors of making up the overall stock market. Technology, we see that the tech was up. Wow, healthcare really came up, but you see over the last month it's just been down. Tech over the last month has really been up, and today a strong candle, even stronger over here. And financials, okay, broke out of this, really seemingly having a strong break out of this 36 area, closing here at 36.57. Again, we got another one where the last candle we see over here was a low. The last candle we see over here is a high. And we'll see if it keeps maintaining it. Kind of light on the volume though. Industrials, another strong one. I would imagine all these candles, yep, it's not looking super strong, but it got sold off all the way down here and rallied up, so it's definitely bullish. They're all looking pretty bullish to the upside. Now let's do something just a tad bit different. Let me see where it's at. Weekly. Alrighty, we're going to look at a monthly chart. Why? Because January is ending, right? This is the last. Starting a new year. We're looking at 3 years, monthly, general markets. And let's look at SPY so we can see some volume here. And I have these, where did I have that at? I've got this S&P 500 on a line chart somewhere. There it is. So that's what you're seeing, these two lines. Well, let's get back over here. So this downward channel that and the downward channels, I think it's possible. Upward channels, downward channels, I think that it's possible that a lot of it is subjective. I mean, you can make your own objective determinations, but is that what everybody's objective criteria is? But so just do with it what you will, right? I've said on these videos before, and I keep saying it because I believe it's true. When you're trading, at least when I'm trading, let me speak from a point of accountability. When I'm trading, I'm not trying to make decisions based on what I can prove in a court of law. I'm trying to make the best decision I can with potentially incomplete information. Maybe if someone else was looking at it, maybe it would be complete to them, but I'm just doing the best I can with what I got, right? So this seems to be a decent, channel. Touching here, right? And what do we see going on here, right? So forget about me justifying my channel here. But what I am seeing through here, come on, get out of there. Look at this. Hey, I thought you were gonna do that. There we go. Boom, you see it, right? Sideways. And if you've been watching these videos, I've been talking about this for weeks, maybe it's been months, where I kind of kept thinking And I don't really exactly know why. I just from looking at what I see on the charts, that it just kind of seems like it's going sideways. Also, yeah, there are some other things. Okay, so um, some of the other things of why I've been thinking it's going to go sideways. Just before I forget, let me switch over to this real quick. So you've got so for example, definitely this right here, that strong bull trend, that was basically something other than fundamentals of companies. That was something other than strong economic fundamentals of the United States. It basically was stuff like quantitative easing, keeping and maybe quantitative easing. Oops. Maybe keeping maybe QE is somehow, related to or the same thing as or something like that. But you've got QE, you've got keeping interest rates basically artificially low, right? NERP. What's NERP? Was it near zero interest rate policy? So you got things like, is it NERP? All right, I think it's NERP. And then you got ZERP. So when these interest rates are low, whether it's directly related, whether it is quantitative easing or whether it is somehow related to it, I'm not really sure, and I don't really care to have an academic debate on it. If you know for a fact and you can document it and show it to me, sure. I mean, I would love to be clear on it, but the reality is whether I know exactly what the definition of NERP is, if I'm making money, I don't give a. I hope you can understand that. My goal is to make money. If I got some definitions wrong, I don't really give two rats' tails. So anyways, so keeping these interest rates low makes it easy for certain corporations to borrow money. And then when they borrow their money, they buy their own stock. They borrow money, buy their own stock. They borrow money, they buy their own stock. Share buyback, stock buyback, something like that. Now there's different, you will hear different arguments about it if you really look into it. So I'm not saying that it's bad, it's good. I think that it's a multifaceted diamond. I don't think there's just one side to this diamond. I think there's definitely different facets, and I think like anything else, certain things can be used inappropriately and not necessarily, like maybe there's a specific reason to use it. Like let's say what is something that I heard that was pretty crazy before? Cough syrup, right? Cough syrup has a specific use, but if you're using cough syrup to drink it as a drug to get high, I mean, it might work for that, but that's not what it's designed for. So you could have this battle of like, oh, we got to ban cough syrup. And what do you mean? Cough syrup is good. It helps you stop coughing. And so it's like kind of could be those same things when it comes to the share buyback. But anyways, so if things like that, let's just say and then you have the plunge protection team. If you don't know what the plunge protection team is and you're still one of these people that blame everything on conspiracy theories, then I apologize no matter how old you are. I don't know. I don't know what to do for you. Do a Google search. It's on it's on like Investopedia. In 1988, President Reagan made this plunge protection team. Same thing like cough syrup. You say, well, they only do this, only do that. Come on, people could do whatever they want with it, right? I guess in the last 20 years, there was at least one president you didn't like. And I don't care which side of the political aisle you were on. So this president that you didn't like, whether it was Democratic or Republican president, is it possible that that person you didn't like could have inappropriately used the plunge protection team? Now, if you start saying no, what a hypocrite you are. Why not? People were screaming bloody murder over these presidents, and you don't think that they would goose the stock market to the upside? Come on, grow up, put your big boy pants on or big girl pants on. So you got all this like government stuff that helps keep the stock market propped up, unless they want it to drop, right? But now sometimes maybe they can't keep it propped up enough. I don't know. But one of my points of going sideways has been this. You've got all this stuff that can happen that can help keep the stock prices propped up. Which politician, Democrat or Republican, which politician wants to go to be reelected and have everybody upset because their 401ks are down here? Nobody, right? So it's kind of like a what do they call that, bipartisan thing where it benefits them to a certain degree to have the stock market up. Okay, so you got that going on, but you don't have the same level of quantitative easing. Okay, we don't. Now they could bring it back, or they could bring back some sort of program, but they call it something different. But whatever they call it, if it's producing this result, I mean, it kind of doesn't matter. If they have to justify how it's not QE, then you know it's going to goose the stock market. So, but right now there's nothing going on like that, right? So that and what do you see going on in society? One of the big things that I keep hearing about right now is mass layoffs. Mass layoffs. You think that's really good? You think that's really good for the economy? You think people are all spending? These people are getting mass layoffs. How about all these businesses that got shut down? I wonder if someone's going to, oh, I didn't see any businesses shut down. Well, hey, I don't care. I don't care. I don't care if you didn't see them. I did. I don't need you to see them and you to validate what I know to be true when I see it with my own eyes. Aloha crepes, where'd it go? Why did it disappear? Why did it disappear? No, don't know, huh? I don't know if anyone watches these and actually is that type of person that's like debating this. But I'm just kind of talking in general of like what I've heard about 46 years of being alive. What I hear people, instead of just trying to be realistic, how they're sugarcoating life. So there's some bad stuff going on. How about war? How about the war in Ukraine? Do you think that's good for? You think that's good really overall for business? You feel like going out and eating a bunch of Baskin Robbins because of the war in Ukraine, or sometimes you feel a little nervous when you start hearing about what to do if there's a nuclear blast. Does that make you feel comfortable? Does that make you feel like you want to go out and whatever? I don't know what it does for people, but there's some bad news going on, right? So things are pushing down. So if you got things pushing up and things pushing down, maybe you just got things going back and forth. So that's why I've been saying that for quite a while, because I've been saying it because what else am I supposed to say? I'm just saying what I believe when I see stuff. And it seems to be playing out to me. Oh, look at this monthly candle, right? Okay, this monthly candle, here's where we saw it really break out of this trend right here. Now, it doesn't mean it was going to stay out, right? Because over here, boom, close back the very next month, boom, back down here. Now, this month opened almost where it closed, a little higher than where it closed last month, and basically back up to this area. What is that? That's sideways. It's like 3 months later, and we're basically back in the same spot, but with a lot of volatility, a lot of up and down. So if it's going to go higher, where we see it right here, like I see it right here at least, you can see that kind of happened like this before, dropped down, shot back up, tested all the way up here. But this time, it tested here, fell back. Not this time though. This time it's staying out. So how long is it going to stay out for? Now, when I say how long is it going to stay out for, that could also mean going this way. Because if it's going that way, it's staying out of there. If it's going sideways, it's staying out of there. But if it falls back down, then it's back into this. So for me personally, I'm looking at I'm being pretty cautious. I'm taking on directional trades, I'm taking profits a little faster, which I actually don't really have as many directional trades. Dow Jones, what do we got going on? A little bit the same, but look at this. On S&P, we saw that the January candle was back up to here sideways. Now here we got a high, we got a low, It's like about halfway. So a little weaker on that one. If you want to look at it as a high, lower high, or do you want to look at it this way? Low, higher low. So I mean, that's some things that's potentially a bit subjective depending on how you're looking at it, and maybe what I can see, maybe you can't see, and maybe someone else looks at the same stuff and they see stuff that I can't see, just based on experience and all that type of thing. Training, education. NASDAQ. I hope you can notice this. Excuse me, Qs, but it's like ETF and NASDAQ. Really, I see it sideways. I get it. It's a little lower here. It's a little lower, but it's really kind of in this range. We'll see if it's just gonna stay in this lower range. I think if how much, 3 years, there's some point if it starts breaking, I don't know where exactly, definitely here if it breaks this low, but this is maybe like the health crisis low or something. There's something in here. I don't know where it would be exactly. Maybe it is right here. Maybe it's this 260. Because to get all the way down here, that's a big drop. But I'm not really seeing any, like from here to here. We don't really have any area of support or resistance. It's really just popping out to me. Maybe if we looked at it in a longer time frame, or if we looked at it maybe on a like a weekly chart, maybe we could see a little more. But definitely the 260. I would say that if it starts breaking 260, now I got it. I see it broke here, but I think that's the part that I would watch, because it right across here over to the left seems like around 260ish is the magic number. Maybe 260 to 240, somewhere in there. If it breaks, if it broke 240, I don't know where any support is until down here around 220. If it really breaks 260, 250, maybe it'll fall back down to there. And then let's look at the IWM for the Russell. Come on, disappear from me. Disappear. Get out of there. All right. All right, you see that? It's kind of been going sideways. How many months is that? 1, 2, 3, 4, 5, 6, 7, 8, something like that. Yeah. So that's I'm still kind of looking at sideways. So what overall, what can you do with that? Going back to the same thing I always go back to. When in doubt, sell cash secured put options on stocks you don't mind owning. And why is that? Well, same thing. It's a longer game, but I think it's a pretty great game. You know what this is? This is your financial statement. Income column, expense column, asset column, liability column. When you're selling cash secured put options on stocks that you don't mind owning or you would like to own, that and let's say they pay a dividend. They're good, fundamentally sound companies that pay a dividend. They might not be like the growth stocks. It's not so much about increasing your it's not about like massively getting this massive bull run, but it's about protecting from the downside, and you'll still get some upside. So generally speaking, upon selling an option, there's 2 things that can happen at expiration, generally speaking. Now, it's possible you could break even, but I'll say we'll put breaking even over here with making money, because I get it, it's not making money, but breaking even is better than losing money, so we'll lump it over here. So one thing that can happen, the contract expires worthless, and the premium that you took in from selling that contract goes into your income column. Now, if you have somehow you get lucky and you don't lose money, and you just break even, then nothing goes in, but at least nothing comes out. Because on some certain trading strategies, if your option contract expires in a certain way, you end up losing money. So instead of cash flowing into your income column, cash is flowing out of your expense column over here. Because generally speaking, with option strategies, you make money or lose money. Generally speaking, it actually takes a bit of adjustment or management skill to break even, or you might just once in a while randomly get lucky, but I haven't seen that happen out of random luck. What I've seen happen is make money, lose money, or adjust, but like I said, it takes skill. Now that's your normal type of option trade, generally speaking, right? Now what about when you're selling cash secured put options? We'll go back to this. So selling cash secured put options, contract expires worthless, money flows, the premium you receive flows into your income column. Now on this one, if the contract does not expire worthless, you have a different result than most other option trades. The result over here, instead of losing money, instead of having money expensed out of your expense column, you have the premium still going into your income column, and then you have at minimum 100 shares of stock go into your asset column. And because it creates a dividend over time, your asset column is putting money into your income column. Isn't that beautiful? So one way you could lose out of this is you pick a stock that basically goes out of business. Because if you pick a stock that goes sideways, or if you pick a stock that depreciates in share price value, as long as they keep paying that dividend, it really doesn't matter, because you can just hold on to it the rest of your life and you can keep funneling money into your income column. I mean, why would you want to take that asset out? And also you could sell cash secured put, you could sell covered calls against it, which theoretically brings more money in. And eventually, if you get assigned, then you got more money flowing into your income column, and the asset doesn't flow out of your expense column, but it leaves. You sell it to somebody else, and the money from the sale is what went in there. So when in doubt, paper trade that, learn how to do that. That is a phenomenal thing. My friend is a nurse, and she works like these long hours. This would be a great strategy for her because she lives in the state of Hawaii. She's a nurse. She works these really long hours. She can put these trades on and not have to really worry about managing them. And she makes money no matter what. And if the contract gets assigned to her, she is just piling assets into her asset column that are going to be funneling dividends into her income column. So check out those links and those playlists in the description of this video below, and you guys have a fantastic day. Aloha.